Okay, everyone, just a quick review of what we covered yesterday, and that was the weighted average number of shares outstanding. Now, we need that in order to do our basic EPS calculation, okay? So, weighted average of common shares outstanding. I'm not sure the acronym they use in the book. Oh, they use WAOS, okay. Regardless, okay. So it's easy enough to determine the top number, which is our net income minus our preferred dividends. But this number here can cause some, we need to do a little bit of work on it. Okay, so let's just review that example in the textbook. We start with 9,000 shares on January 1st. Or 9 million, sorry. And then on, right here we have September 1st, we issue another 3,000 shares. So now we're at, how much? We're at 12,000. Or 12 million, I don't even know why I keep saying thousands. Anyways, so we gotta figure out the weighted average. So at December 31st, yeah, there's a total of 12 million shares outstanding. But we've got to figure out the weighted average for the year. Okay, so for 8 of the 12 months, we had 9 million shares outstanding. And for 4 of the 12 months, we had 12 million shares outstanding. So you cross multiply, you get 6 million, 4 million. So our weighted average is 10 million shares. Now, I want to throw a little bit of a curveball at you. What would have happened if, say, in this scenario here, on December 1st, we retire 1 million shares? So now we're down to 11 million outstanding. Well, we got to recalculate, okay? So for 3 months, we'll have 12 million shares, and for 1 month, we'll finish off with 11 million shares. Okay, so we're just, again, we're recalculating. Okay, so we'll take 3/12, which is 25% times 12 million. And that'll work out to 3 million. And then we take our 1 month. So 1 divided by 12 times 11 million. 1 divided by 12 times 11 million equals 916,666. Okay. So again, you calculate that out, and we get an outstanding weighted average of outstanding shares of 9,916,666. Okay. So again, the textbook example just used a scenario of adding shares, okay? I tweaked a little bit from yesterday and I said, okay, well, yeah, that's great, but what happens if we have to reduce the number of shares? It's the same thing, okay? But again, this is the most important part, okay? It's the number of shares outstanding for that month. Okay, so let's look at a couple other topics here on page 416. Let's look at contingently issuable shares. So these are ordinary shares, so just say common shares, that are issuable for little or no cash upon the satisfaction of conditions, okay? So for an example, we may agree to issue shares to a stakeholder if a license to a new product is granted, okay? So again, it just depends on, it's contingent, it depends on something. So we're gonna include any contingently issuable shares, we're gonna include in the weighted average, okay, from the date the conditions are met. Not from the date that we actually issue, but again, from the date the conditions are met, okay? So that might throw a little bit of a curveball if you get a question like that, okay? But again, just go back to the textbook, and again, if we're gonna issue an additional 1 million shares, if that new product is granted, okay, well, we met the condition on August 1st, but we didn't pay out those million shares until September 1st. We're going to use the August 1st date because that was the date that the conditions were met. Okay. Now, what about share splits and share dividends? Okay, we talked about that before last year. It was chapter 14, I believe. Okay, so if you have a textbook, you can go back to last year's Introductory to Financial Accounting textbook, take a peek. But for example, so a stock split. What is a stock split? Well, actually, I'm just going to talk about stock splits and stock dividends first. So these are treated as though they had been in effect for the whole period. So that stock split or that share stock split, that share split or that share dividend, when I use the term stock, it means share, okay? Stock is an American term, share is a Canadian term. So stock splits and stock dividends, okay? We need to treat that as if it had been in effect for the whole period, okay? So comparative EPS figures for previous accounting periods are also restated, okay? And only when there's been a share dividend and share split or a reverse share split during the reporting period. So we'll only go back to the prior year and restate EPS if we have a share dividend or a share split. Okay, so again, remember a share dividend is instead of paying cash dividends, we're going to issue shares. And a share split is we might do a 2-for-1 split. Okay, so if we have 1,000 shares, we now have 2,000 shares. So that doesn't change any dollar value, it just changes the amount of shares outstanding. Okay. So let's go look at the example on page 1417. Okay. So the following example illustrates the calculation of the weighted average of outstanding shares, okay, when there are bonuses. So a corporation has 5,000 common shares outstanding on January 1st. Okay, easy enough. January 1, 5,000. Now, on March 31st, there was a conversion privilege on convertible bonds that's exercised, resulting in 2,400 shares being issued. Okay. So again, we just convert, so we're adding to the shares. Okay. That's not contingent. Okay, it's just a convertible bond that's exercised at that date. Okay. So now on March 31st, let's just say it's April 1st. This will go to March 31. Now we have 7,400 shares outstanding. So we can figure out the months, okay? It's gonna be, if we go across, we're gonna have 3 of 12. Okay, we don't know for April yet. Now, on September 1st, the shares are split 2-for-1. Okay, so on September 1st, 2-for-1. So now we have 14,800. Remember, a stock split or a stock dividend has to be treated as though it has been in effect for the whole period. Okay, so we're going to go times 2. And we can close this off. So April, May, June, July, August. That's 5 12s times 2. Why times 2? Because we have to apply the split that happened on September 1st to the prior periods. Okay. Now, on October 1st, we issue another 3,000 shares. So now we're at 17,800. Now, we don't have to do the share split effect because that was after the date. Everything after, we don't really worry about. We worry about everything before because, again, we have to treat it as if that share split had happened at the beginning of the period. Okay. So now we can close this off. This was to August 31. Okay, so this will be for 1/12, and August, September, October, November, December, 3/12. Okay. So again, we're going to cross multiply all this. Okay. And again, just like it has in the textbook, 2,500. Okay, 6,167, 1,233, and 4,450. Okay, so for a total weighted average of outstanding shares of 14,350. Okay. So this pertains to the common shares. So let's go now look at what happens if there's other effects of a share split or a dividend. So if a stock dividend or stock split occurs after the end of the year, okay, it is also included in the weighted average calculation for the current year. Okay, so a stock split or a stock dividend impacts the number of shares into which each senior security is convertible and must be adjusted accordingly. Okay, so this will increase the number of shares for options and convertible securities when we look at our EPS calculation. Okay. So again, we're just going up to a couple more pages. Okay. So again, if it occurs after the end of the year, we're going to put it in the current year. Okay, so is there an example here? Post year-end split or dividend. If there's a stock dividend or stock split after the year end in the next fiscal period, it's factored into the weighted average calculation of the current year. Okay, this applies to stock dividends and splits that take place before the financial statement is authorized for issue. Okay, so it says here, assume the company's fiscal year ends is December 31st, 05. 30,000 common shares have been outstanding for the entire period. Then on the 15th of 06, so 15 days after the fiscal year end date, they do a 1-for-3 reverse split. So those 30,000 shares become 10. Okay, the 10,000 figure will be used for the EPS calculation, even though that reverse split occurred after the year end date, but before these statements were issued. All right, just a couple more things. One more slide. Multiple classes of shares. So we might have multiple classes, might have Class A shares, Class B, Class A common shares, Class B common shares, okay? Each might be entitled to a different dividend, maybe, maybe not. Okay. So if two or more classes of share dividends if two or more classes of dividends equally, I can't even read this slide here. It says, if two or more classes share dividends equally, okay, so we have Class A and Class B. If they each get 50% of the dividend, well, then they share equally. Okay. Then all common shares are included in that denominator for the basic EPS calculation. Okay, that's going to be what we're going to focus on if we have two classes of shares. Now, there's also dividend privileges. So if dividend privileges are different, okay, then we have to do an EPS calculation for each class of share. Okay. Voting rights don't matter, only dividend privileges. Okay. So, but again, we're going to see the scenario of where if there are multiple classes, they are going to share dividends equally. Okay. All right, so that wraps up that wraps it up for the day. So I said today's short. Okay, tomorrow we're going to start focusing on dilutive property. So what dilutes the share? And remember, dilution is hypothetical. Okay, so again, that's it for today. 2 questions assigned, A20-2 and A20-5, and we'll see you tomorrow.